Good morning, traders and investors. My name is Roger Scott, and I'm the senior strategist of Wealth Press. Today is Wednesday. It's November 9th. It's about 8:08 in the morning. The market's going to gear up in about an hour and 22 minutes to be specific with you. Now, as you can see here, the Dow's down about 82 points. The NASDAQ is down a little bit. The S&P's down. The market looks like it has priced in everything it would. It's had 3 or 4 up days in a row, and it looks like it wants to cool off a little bit. Now, I've been anticipating this cool off for quite some time, especially in light of the fact that the Dow Jones, which has been very persistent, has been trading literally almost above the 200-day moving average. And if you look here, especially in the market we're in right now, for us to go above the 200-day moving average a little too much would be just unrealistic because, we just heard news the other day that 37% of small businesses cannot pay their bills. That doesn't, in September, it was 30%. That does not look like a bullish market environment. So I think this is too much too fast, and I'm expecting a nice, reasonable correction to take us to the downside. And I think the market just got a little too happy before the election, and now we're anticipating to figure out who won the race because it's so darn close. It looks like Republicans are in the lead, but again, we don't know till we get the decision, and I'll talk about it in a few minutes. But the bond market is not letting go. The bond market is not moving higher. That puts pressure on the stock market. Let's talk a little bit about pre-opening briefing. We've got a lot to talk about, and remember, tomorrow, folks, reality sets in. We have the CPI report, and I don't care who wins the election. They're not going to help the CPI report. They're not going to talk any sense into Powell in the next couple of days. So let's talk a little bit about what's going on right now and how we can take advantage of this market. And remember, today's Wednesday, and on Wednesday, I talk about one long, one short. I give you actionable trade ideas. So markets are down just a little bit after 3 major indices rallied for 3rd consecutive session going into the election, waiting results for the midterm election that could indicate a big power shift in Washington. And I think we're going to see a semi-shift, not a complete shift, but a semi-shift, which would only bring more headaches and more turmoil because then they would be fighting over everything. But better than Biden just giving it. Well, anyway, I'm not going to get into all the politics. Basic materials, telecom, industrial were rallying yesterday. That actually makes sense. I don't know about telecom. I don't know what telecom had to do with anything, but I'll take it. Nonpartisan forecasts and opinion polls proposed a strong possibility of Republicans winning a House majority and a tight race for Senate control. A surprise victory for Democrats, which I don't think is going to happen, will likely raise concerns about tech sector regulations and budget spending that could fuel already high inflation. That'll be very interesting to see. But I think Republicans will take the House. Investors are awaiting crucial consumer price data. That's coming tomorrow. That's going to make a big difference of what the Fed does. And here's the crux of all of it. As you can see here, we have a 56.8% chance of a 50 basis point rate hike and a 43% chance of a 75. Now, these numbers keep going back and forth. A few days ago, we had 48% for 75. Now it's 43%. So I think the CPI is going to determine this, and it's going to put these percentage points at a very high interval. In other words, it'll be like 80 to 20 after the, but honestly, if not 7.5, we're going 0.50. We'll find out. One of the things that I really appreciate for once, and don't quote me on that because you won't hear me saying that a lot, but one of the things that I really appreciate is the fact that the Fed is now saying lag. That lag gives them a little way out. That's really good. Today, we're focusing on crude oil inventories. Economists on average forecast inventories to stand at 1.36 million, compared to last week figures of minus 3.115. That's crazy. Wholesale inventories will also be received today. They're looking at 0.8 month over month. I'm not really looking at month over month. I'm looking at year over year. China's not looking better, and that's going to put pressure on the U.S. Data showed the country's PPI shrank for the first time in a year at 1.3%. It's not crazy. Consumer inflation stood at 2.1%. When you look at the inflation and you look at the PPI, they don't look good. It looks like they're in a negative 1.2. Weaker than expectations of 2.4% year over year as COVID lockdowns crimped local economy. And gloomy economic data deteriorated sentiment towards China amid dwindling hopes that the government will scale back its strict COVID-19 policies. And in Japan, We're making a new month low continuously weighted down by financial services, power, and warehouse sectors. Don't ask. I can't give you an answer on that one. Again, the bond market is near its lows. That's not really happiness, but I think the bond market's going to give us a really good direction, and I think in this case, the CPI will give us some guidance in terms of what the Fed will do. But as I mentioned, these numbers right here is what you need to focus on, because last time it was like 90% 7.5 and like 3% 0.50, but now they're kind of going back and forth because I actually think the Fed is going to go 0.50. Unless the data is really, really, really bad. I think either way, I think the fact that they said lag, that's going to give room for 0.50. Volatility, as I mentioned yesterday, stopped going down, which is one of the reasons why we got rid of our position. And I think volatility is going to be going higher. And again, I see the Dow Jones breaking down right here. And again, if you look at the QQQ, which is interesting, the other indices are not that far up. See, notice the QQQ, the Dow is already at the 200-day moving average. But look at where most of these indices is. They're not. And look at the SPY. It's like halfway there. So I think the Dow is really running up right now for no good reason. And I mean, it still has a lot of stocks that are not necessarily recession friendly in it. I mean, they're a little more stable, but typically, the Russell 2000. One second. Let me just give you the futures so you could actually see the futures. You could see how the Russell 2000 has been fairly steady. It hasn't really been going down all that much. There you go. There's a 1 year. See that? It's been holding steady pretty good. And right now, if you look at it, it isn't really going down. It's kind of going sideways. I like that. But this should rally before the large caps. The large caps are not the first ones to rally. They're usually the last ones to rally. But again, volatility looks like it's about to pick up, so be very, very cautious. Put the call ratio, as I mentioned yesterday, it's not that strong, but it's now at 115 again. So we're again oversold, but we've been in that area for most of the year. My scenario right now is downside. I think we're going to see some downside action. And I think you guys got to be a little more defensive than usual. So for a long position, I like healthcare right now. Now, I know this is an expensive stock, but it's pulling back, and I think it's going to gear up to make highs again. I like this stock. An option on this may be good, Humana. Now, to the downside, I'm not expecting anything beautiful out of technology right now. I think technology is a little overbought, and I think chip stocks like ADI, I think they're going to continue moving between the 200-day moving average and the 140. And right now, buying put on this would not be the worst idea. So chips right now and technology are on the down list, and especially if you look at the sectors. Notice you had yesterday 274 stocks, 20-day breakouts, only 35 breakdowns. Not a very good mix, but here's what I wanted to show you. If you look at the 11 sectors, and you will see that communication and consumer discretionary are still at the bottom, and technology's just up here. These stocks, technology, consumer discretionary, communication services, and real estate right now are not the stocks that you want to have in your portfolio. They're not really all that great. You may want to sell those stocks, but I don't think you want those stocks. Also, if the CPI is real nasty, it's going to have a major impact on the consumer discretionary going out stocks like amusement parks, cruise ships, hotels, things that we're short right now. So be very, very, very cautious because tomorrow's report can have a major, major impact. Right now, I would be watching the bond market. I would be watching the VIX very, very carefully because the VIX looks like it's about to turn. And I would be looking at the Dow Jones. And let me tell you the level I'm looking at on the Dow. I'm looking for the Dow to break the 200-day moving average, which I'm almost certain that it will. I mean, look at this RSI. I mean, look at this is craziness here. It huffs and puffs, and then it just comes back down. I don't think even if Republicans win Senate and House, it's going to turn anything on a dime anytime soon because the Fed is still controlling the economy. And what they've done so far, it's going to take a lot more than an election to undo it. So again, for the long side, healthcare, ADI. Now, there is one other stock that I'm actually liking right now that's pulling back. Let me give it to you. I didn't think I was going to have time to give it to you today, but I do. And that is, where is that stock? I'm actually starting to like this stock a little bit. Where is this stock? Oh, I'll find it. I'll find it. I'll find it. I'll find it. I'll find it in a second. There we go. PSX. PSX. It looks like it can go higher, and it looks like it's been consolidating, and it's not expensive, and it's an energy stock. So PSX is the other stock I would go for the long side. Hopefully, this gives you a good idea. And remember, the election's not going to answer any short-term questions. It's just going to cause sentiment volatility, which the Fed will knock us out of tomorrow. So keep your eye on the Dow, and don't expect the market that'll just go higher. Because if the market goes higher from here, we will, in effect, be entering a bull market. And right now, with momentum levels, I want to show you momentum levels. I mean, look at the Dow Jones. You've got 35% of stocks trading above the 200-day moving average, S&P 500 40%, and QQQ 30%. So we're not anywhere near bullish. So don't let the market trick you right now. Now, folks, we've spent a lot of time talking about inflation and the Fed for good reasons. News about either tend to create big moves and volatility spikes. Now, when the Fed raises rates or inflation comes in hot, for example, the market flips out, and that causes certain sectors to get out of balance. Now, November was no different, but members of Alpha Rotation Service, they didn't sweat it, because my powerful ETF rotation strategy can help you. It can help you capitalize on the strongest and the weakest sectors. You've got to get in on the action, and my top stock has been killing it. I think we've had like a 90% win rate in the last every trade this year. It's been really, really crazy. You got to check it out. Watch my free in-depth class on how Alpha Rotation strategy works by clicking the link below. You do not want to miss out. And if you have Alpha Rotation, check it out. Again, you will love it, and you will get some tidbits. It's full of education. Which sectors are outperforming, how to gauge sectors, how to trade sectors, how to create clusters, how to read momentum, how to gauge momentum. It's really something you need to check out. Follow the link below. Check it out right now. And remember, like these videos, subscribe to this channel, and comment, and I'll respond. Bye, guys. Have a great midweek. And if you're in the if you're in Jacksonville, be careful of the wind. St. Augustine, there's a storm coming. Bye, guys. Take care. Have a great, great day. And let me know if you like these videos. Bye.